Breaking economy news. Holy cow, 292,000 jobs in December with 50,000 upward revisions to October, November. The labor market is manufacturing jobs like there's no tomorrow. The economy at year end is in the perfect position to weather the financial market storms from China in the new year. Data like these tell the Fed to keep raising rates and don't stop. Let's stop telling ourselves fairy tales about the pockets of weakness out there in the country. The economy was at full employment when the Fed pulled the trigger in December and lifted off, and it's over full employment now. Everything we write is the unvarnished truth always, but maybe not all the 292,000 is going to continue into 2016. Some of the strength is undoubtedly due to the warmest winter on record. Construction jobs added 45,000 of the 292,000, larger than normal the last few months. We know the housing market is recovering, but construction jobs are unlikely to continue at this pace. The report has lost some of its punch when it comes to driving the bond market up or down. The Fed is not expected to raise rates until March at the earliest, so there are 2 more monthly jobs reports to go before that decision. Yellen has said the Fed has achieved the employment half of its dual mandate, so all the drama on that question is gone. 10-year Treasury yields barely changed from 2.17% before the jobs report flashed on the screens of those traders still left on the street. Yellen said it was time to lift off, but she said there was still slack out there in the labor market. If there's slack, then that is reason enough for the Fed to raise rates a gradual 4 times per year, total of 100 basis points, until they get it to normal levels of 3.5% in their view. The participation rate is one stat she looks at on Slack, and this went in the right direction today, moving from 62.5% in November to 62.6% in December. Those working part-time but wishing for full-time employment held steady at 6 million in December. Many of these say they could only find part-time work, which means this is how companies hire now, and not a sign of economic weakness or slack. Fed officials should really stop talking the economy down all the time. It's affecting the public's confidence. Net-net, the labor market was extremely strong in the final months of the year, and this provides credible evidence that the economy and the Fed's policy are moving in the right direction. We look for another measured rate hike of 25 basis points at the March 2016 meeting to 0.75%. Don't be fooled by these forecasts that real GDP is growing less than 1% in the fourth quarter. The more reliable number of how good conditions are out there is jobs, 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 and 307,000 October, 252,000 November, and 292,000 in December means Q4 was a blowout quarter. The economy is stronger than you think. The risks from China are overblown, those threats. 4 rate hikes are coming this year. Bet on it.